What's going on, everybody, and welcome back to yet another video. In today's video, I'm going to be giving you guys a complete guide on futures trading. What is futures, the point system, a strategy that you can start implementing right away to make money, as well as brokers that you can start using to trade futures. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so first I want to start off with the overall point system and what you can trade when it comes to futures. So first, let's start off with what is futures. Futures are derivative financial contracts that obligate parties to buy or sell an asset at a predetermined future date and price. The buyer must purchase or the seller must sell the underlying asset at the set price, regardless of the current market price at the expiration date. That's just fundamentally what futures are. Honestly, we really don't have to worry about that because we're looking to just take advantage of short-term momentum and be in and out of the trade at a profit or at a loss. Underlying assets include physical commodities and financial instruments. So things like gold futures, silver futures, corn futures, wheat futures, and then as most of you guys are familiar with, the S&P 500 futures, as well as the NASDAQ futures. Futures contracts detail the quantity of the underlying asset and are standardized to facilitate trading on a futures exchange. Futures can be used for hedging or trade speculation. So a lot of the big money actually uses futures as hedging, especially the big oil companies. But us as traders, we're pretty much using them for speculation. So now, because most of us are going to be trading futures on the S&P 500 or the NASDAQ, I want to break down the point system. And again, there's plenty of different asset classes that you can trade futures on. As far as the S&P 500 futures, 1 point is going to equate to $50. So if the S&P 500 futures are trading at 5,300 and you go long, well, if price goes up to 5,301, you're going to make $50. If it goes up to 5,302, you're going to make $100, so on and so forth. Let's just say you go long at 5,300 and price drops down to 5,298. You're going to lose 2 points, which is going to be a loss of $100. Now, if you're not comfortable with that $50 per point, what you can actually end up doing is trading the micros. Now, the micro S&P 500 futures, 1 point is going to equate to $5. So again, if you go long at 5,300 and price goes up to 5,302, you're going to make $10. And then vice versa, if you lose 2 points, you're going to lose $10. So if you're somebody who's new to trading or you're not comfortable with losing those $50 per point, I would highly suggest looking into the micro S&P 500 futures. That way you're not losing a lot of money off the bat, or you don't end up accidentally blowing your account because you're not used to $50 per point. Now, as far as the NASDAQ futures, 1 point is going to equate to $20. The only thing is with the NASDAQ futures, this moves very, very, very quick. Like we could move 10 points in the span of like 5 seconds on the NASDAQ futures. That's how fast it moves. So if any of you are already trading the NASDAQ futures and that's what you trade every single day, more power to you. I personally don't like trading it. But if you do decide to end up trading it, again, 1 point is going to equate to $20. So if you went long at 18,000 and price went up to 18,010, you're going to get about 10 points, which is going to be $200 profit. And again, that can happen in the span of like 5-10 seconds that we can make that move. Now, if you're not comfortable with the regular NQ futures, what you can look into is the micro NASDAQ future. So 1 point is going to equate to $2. So again, in the same scenario, if we went up 10 points, you would make $20. Now, here's the main difference between options and futures and why a lot of traders have switched from options to futures is because options have Greeks where the futures do not. Options experience higher volatility than futures. A stock could go in your favor and you still lose money because, again, the Greeks are playing a role, or maybe theta because you're trading a 0 DTE. But many things come into play when pricing an options contract, and just because it goes in your favor does not mean that you are going to make the money that you should. However, in futures, there are no Greeks. The only thing you have to worry about is the point system, again, which is why a lot of people prefer to trade futures. And also, on top of that, in my honest opinion, price action is a lot cleaner on the futures. So now, before we hop into the brokers that you can start using to trade futures, if you're using ThinkorSwim, the way that you're going to pull up the S&P 500 futures is just going to be /ES. Now, if you're trying to pull it up on TradingView, what it's going to be is ES1 exclamation point, and then that's how you're going to pull up the S&P 500 futures. Now, if you want to pull up the micros, honestly, it really doesn't matter because the micro S&P 500 futures are going to look exactly the same compared to the ES futures. So we can actually just pull them up side by side. Sorry about this other messy chart. but you can see that it's literally the same exact thing. So you could just trade the micro futures based off the ES chart, or I mean, if you really want to actually pull up the chart, then just type in /MES. And then if you want to pull up the micro E-mini futures on TradingView, all you have to do is type in MES and it's going to pop right up. But again, the chart is the exact same. So I would personally just have ES pulled up. But if you really want to have MES pulled up, then just type that in. Now it's going to be the same for the NASDAQ futures, except to pull this up, you're going to type in /NQ. That's how you pull up the NASDAQ futures. And then if you're going to be doing the micro NASDAQ futures, it's going to be /MNQ. But again, they're the same exact thing. They move the exact same, everything about the technicals, same exact thing. You might as well just have NQ pulled up. And then it's really up to you if you want to trade MNQ or if you want to trade NQ. And as far as the strategy when it comes to trading futures, if you're going to be trading the NASDAQ futures or the S&P 500 futures, you have to pay attention to all of the instruments of the S&P 500 as well as the NASDAQ. So what I mean by that is if we pull up ES, again, that's the S&P 500 futures, but we also need to pay attention to SPY, because sometimes the way that the futures trade in the overnight session, SPY and ES are going to be at two completely different areas, and we're going to see two completely different areas of interest. So there's been plenty of times where ES comes down to a bounce area, but SPY is nowhere near that bounce area. So I have to end up taking the trade based off of ES. Or on the flip side, maybe SPY comes down and hits my bounce level, but ES is not near that level. So if that's the case and I get confirming price action, I have to watch the SPY chart to confirm the futures trade. So I'll simply trade the futures, but I'll base the trade off of SPY chart and use the SPY chart while I'm in the trade. Again, hopefully that all makes sense. But if you're simply just looking at ES, you're going to be missing out on key information. And a really good example actually was yesterday, this 525 area right here, which is a psychological support on SPY. We can see that we came down to it, made a support, and then we started to push to the upside. Well, if we pull up the ES futures, again, sorry for the messy chart, but if we pull up the ES futures and we look at yesterday on the 5-minute chart, so looking at SPY on the left chart here and the ES futures over here, well, we had no key level on ES, but we had a key level on SPY. So because SPY was bouncing at that level and making its support, again, we could have taken longs on the S&P 500 futures, but based the trade off of the SPY chart in that 525 level. Had you just been looking at the S&P 500 futures, you would have never seen this setup. That's why you have to be looking at both. Now, another thing that I like to look at when I'm trading the S&P futures is also SPX, because SPX key psychological levels such as 5,300, 5,200 act as really strong areas of support and resistance. So on Monday, you can see that we came up and we rejected 5,300, and that was the exact high of the day. Today, we came down to 5,300, made a support, and that was pretty much the bottom before this huge rally today. Well, if we go back to the S&P 500 futures on Monday and then today, was there really any reason to short on Monday? Was there a key level up here? Because I personally did not have a key level up here. And then today, I didn't have a key level down here on ES. The only thing that would have validated a trade for me on Monday and today was that 5,300 area. Now, I guess today you can say pre-market low, but honestly, that's not like a super high probability zone to base your trades off of. But that 5,300 was the thing that would have confirmed a long or a short on Monday. So again, we're looking at ES, we're looking at SPX, we're looking at SPY, and we're using all three of those things to give us a really good understanding on what's going to happen next. And it's really up to you if you want to trade the futures, SPX options, or even SPY options. But again, whatever chart confirms the trade, that's the chart that you're going to pay attention to. But as far as the instrument that you trade, completely up to you. Now, it's going to be the same thing on NQ and QQQ. So if you decide to trade the NASDAQ futures, you also want to pay attention to QQQ, because sometimes a trade might confirm on NQ and sometimes a trade might confirm on QQQ. QQQ might come down and bounce the level before NQ does, or NQ might come down and bounce the level before QQQ does. That's why we want to pay attention to both. So again, today's a really good example. NQ came down and hit that VWAP to a T before rallying back to the upside. Well, if we head on over to QQQ today, we can see that QQQ actually ended up breaking below that VWAP. So had you been using VWAP as your confirmation, it doesn't look nearly as good as this NQ chart when it came and tested that VWAP. So if QQQ ends up confirming the trade, it's up to you if you want to trade QQQ options or NASDAQ futures, but you'll use the QQQ chart while you're in that trade. Or if NQ confirms the trade, then you're going to use the NQ chart while you're either in QQQ options or NQ longs. So I kind of view the S&P 500 futures, SPY, SPX, NQ, and QQQ as one big spider web, and you have to have a really good understanding on what's happening with all of those to give you a clearer perspective on the market and what to expect next. So now, as far as brokers when it comes to trading futures, I mean, it's really up to you if you want to use something to fund your own capital or if you want to go the funded account route. I personally don't use funded accounts. I don't trust them. Plus, I have the capital, so I might as well use my own capital in a futures account. But if you're somebody newer who's not too experienced with futures, you can look into the funded accounts. But again, a lot of them are iffy, so definitely make sure you do your research. But the broker that I personally use for my futures trading is going to be on Tradeovate, again, using my own capital. But they also do have funded accounts that you can use over there. I believe Apex is only funded accounts, but yeah, you could look into Apex and use NinjaTrader with that. Or if you want to use like a real regulated broker, you can use interactive brokers as well as ThinkorSwim. The only issue is with ThinkorSwim, the fees are pretty high, so I don't really suggest trading futures on ThinkorSwim. But overall, I feel like Tradeovate's the best, and I'm not getting paid to say that. I'm not an affiliate of Tradeovate at all. It's just overall, I think it's the best platform as far as getting your fills, the charts, as well as the fees. So those are the brokers that I would look to. But again, make sure you do your own research before you open up one of these accounts and make sure it's right for you. But anyways, that's going to wrap up this video on introduction to futures trading. If you guys would like more videos on futures, definitely make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. And then comment down below any topics on videos you guys would like to see. Other than that, everybody have an amazing day, and I'll see you guys in the next video.